Welcome to Mark Gibson's Human Rights Channel, accountant with designations CPA, MBA, CMA, ACPA, ASA, Australia. Enjoy learning!
So good morning, class, and welcome to your financial management class. Today we'll discuss about working capital management followed by cash management. No? So my initial video recording, which I shared with you, tackles a different approach on working capital management. So today we'll discuss all the other strategies surrounding working capital management. So just as a review, working capital includes, well, the formula to arrive with your working capital is current assets less current liabilities. And therefore, all the accounts classified under current assets, accounts classified under current liabilities will need to be managed, no, uh, when we are achieving for a well-managed working capital. No? So what are those accounts under your current assets? Of course, we have your cash, your notes receivable, your accounts receivable, your marketable securities, inventories, prepaid expenses, and others. No, and what about the current liabilities? So you have your notes payable, accounts payable, accrued expenses, and others. So like I said, in order for us to be of sound position, no, in terms of our working capital, we all need to manage all these accounts. No? So today, we'll cover working capital in general. And then later on, we'll also discuss some strategies on cash management. Okay. So working capital management refers to the administration and control of the more liquid resources to make sure that they are sufficient to cover the day-to-day business operations, including anticipated contingencies. So it refers to the administration and control of current assets and current liabilities to maximize the firm's value by achieving a balance between profitability and risk. No? So earlier, like I said, working capital management is simply managing all your current assets and current liabilities. No, these are the more liquid resources so that you can be so sure that you will be able to manage your business operations. All right. So this is very basic, no? So the difference of your total current assets and total current liabilities is simply your working capital. But what are the advantages of adequate working capital? Of course, number one, solvency of the business, goodwill, easy loans, cash discounts. Of course, if you have money with you, you can purchase on cash and therefore get some cash discounts. No, so these are only given to customers who are paying in cold cash. No, like it's like we always say, cash is king. No? So therefore, even well, especially in our situation right now during pandemic, it's very, we should always strive to keep the appropriate level of cash balance, no, to make sure that the operation continues. No? Of course, regular supply of raw materials, regular payments, ability to face crisis, no? Quick and regular return on investment, exploitation of favorable market conditions. No, class, when we say exploitation, this is really not the abuse, no, but basically because you have adequate level of working capital, you can participate in whatever opportunity that the market is giving you. No, so of course, number 10 is high morale. Okay, so now what are the disadvantages of excessive working capital? Of course, we have idle funds, unnecessary purchasing. So isipin mo lang sa sarili mo, no? If you have lots of funds with you, tendency is syempre, you browse on Lazada, you browse on Shopee, and then what? Nandiyan na agad yung mga deliveries mo, no, without you knowing. Oh, talaga, without you knowing. So, yun nga, dahil you have excessive funds, it tends to also result to unnecessary purchasing. No? Of course, overall inefficiency, low rate of return on investment. Well, the very reason is you're not participating in investing your, say your cash. There's an excessive working capital. So when we're talking about cash, there's too much cash in your possession. You're not investing it in marketable securities. You're just holding it. No? So there's an element of what we call opportunity cost. No? So opportunity cost is basically the benefits forgone, no? For simply not participating in, or simply not investing in different instruments. No? Of course, it gives rise to speculative transaction, and relationships with bank may not be maintained. No? The very reason why we need to maintain a good relationship with the bank is that when you need funds in the future, banks are, they can offer fast loans, you know. So it's a really good source of credit, especially when you require short-term or even long-term financing. But then if you're just keeping your money with you, say nilagay mo lang sa baul or nilagay mo sa ilalim ng unan, of course there's no relationship that you can establish with the bank, no? So that's also a disadvantage of excessive working capital. Okay, so let's now talk about the different working capital financing policies. So number one, matching policy, or also called as self-liquidating policy or hedging policy. So the matching the maturity of a financing source with an asset's useful life. So number one, short-term assets are financed with short-term liabilities. Long-term assets are funded by long-term financing sources. So parang ganito lang yan, class. Say for example, you buy merchandise, no? Merchandise. Of course, by purchasing merchandise, sabihin natin on account, so nag-increase yung inventory mo. That's at the same time, nag-increase yung accounts payable, which are both short-term, no? So ibig sabihin, there's a matching between short-term assets and short-term liabilities. So yun lang naman ang matching policy. Number two, conservative or relaxed policy. Operations are conducted with too much working capital. Involves financing almost all asset investments with long-term capital. So paano yan, class? Sasabihin lang natin di pandemic, no? Of course, you're into dating. So nag-iya ka ng makipag-date dun sa partner mo. Sabi mo sa kanya, date tayo. So saan ang place of date? So date place nyo, sabihin mo na Jollibee, favorite mo kasi yan. Ang conservative or relaxed approach would be, pupunta ka sa Jollibee, makipag-date ka, pero ang dala mong pera, 10,000 pesos. Kasi ang nasa isip mo, para sigurado kasi itong nililigawan ko nito, baka mamaya hindi ko mapasagot kung ang in-order niya isang bucket, tapos dinala niya pa pala yung family niya. So talaga palang buong family kayong pupunta sa Jollibee para kumain. Pero date niyo yun, ha? So again, pag conservative or relaxed policy, 10,000 pesos ang dala mo, ha? Pero Jollibee yung pupuntahan niyo. Hindi pwede nila lang yung Jollibee, favorite natin yan. So, yun yung conservative or relaxed policy. Number three, aggressive or restricted policy. Operations are conducted on a minimum amount of working capital. It uses short-term liabilities to finance not only temporary, but also part or all of the permanent current asset requirement. O sige, going back to my example, yung date mo sa Jollibee. This time, in aggressive or restricted policy, ang dala mo, 500 pesos lang. So kinakabahan ka ngayon kasi baka yung ka-date mo mag-order ng isang bucket. So ang in-order mo lang sa'yo is yung lumpiang Shanghai na lang sa'yo para to make sure na yung 500 mo will be enough for the two of you. At nananalangin ka pa na sana siya lang yung pumunta at walang chaperone, no? So that's aggressive or restricted policy. O class, ha? I'm just giving exaggerated examples just for you to appreciate the concept, no? So number 4, baka kasi ang maalala nyo lang sa exam si Jollibee or yung ka-date nyo, no? Basta ang pinag-uusapan lang natin, pag conservative, too much working capital. So yun yung 10,000. And then pag aggressive, ito yung 500 lang yung dala mo, no? Lakas pa ng loob mo. Baka mamaya madapa ka tapos wala ka ng pamasahe pa uwi. At least napasagot mo naman yung ka-date mo, so okay lang. Number 4, balance policy balances the trade-off between risk and profitability in a manner consistent with its attitude toward bearing risk. Okay. Now, what are the ways of minimizing working capital requirement? Kasi sabi nga natin kanina, we don't want excessive working capital for the very reason, yun nga, inisa-isa natin yung reasons kanina, isa dun inefficiencies, no? So number 1, managing cash and raw materials inventory. Pansinin nyo class, in order for us to minimize working capital, actually we're looking into current assets and current liabilities. In number 1, we're looking into cash and inventory, no? So raw materials inventory. Number 2, having efficiency in making collections and in the manufacturing operations. So making collections. So collections, so involved dyan na AR natin. No? Manufacturing, so business operations or cash conversions. No? Number 3, implementing effective credit and collections policies. So again, AR. Number 4, reducing the time lag between completion and delivery of finished goods. So again, inventory. Number 5, seeking favorable terms from suppliers and other creditors, or your AP or your notes payable. So again, in managing our working capital requirement, we need to look at this current assets and current liabilities accounts. We have to make sure that we're able to manage each of these accounts so that we'll be able to manage working capital in general. So yun lang palagi yung tatandaan natin in working capital. Having said that, let's now go to cash management. Kasi sabi nga natin, di ba, working capital involves current assets and current liabilities. In fact, the formula is current assets less current liabilities. So whatever is the result, that's your working capital. Now, let's go to cash management. So cash management involves the maintenance of the appropriate level of cash and investment in marketable securities to meet the firm's cash requirements and to maximize income on idle funds. So class, highlight ko dito is appropriate level. So later on, we'll also cover what's the appropriate level of cash ba. Siyempre, during our discussion on cash flows, napag-usapan natin yung different activities involving cash, no? So you have your operating, your investing, and financing. Now, in order for us to make sure that we'll be able to continue the business operation, of course, we have to have appropriate level of cash. No? So later on, we'll also discuss that further. But why are we also looking into investment in marketable securities and yet we're talking about cash management? Tandaan kasi natin class, hindi natin gusto na meron ding excessive cash, no? So sabi natin kanina, kung meron kang excessive cash with you, you have to invest it, no? And of course, you have to invest, especially if that cash is part of your working capital, no? You have to invest it in instruments that are highly liquid, no? So meaning there's a market for a particular instrument that you can sell right away, no? So one of that is the so-called marketable securities nga, no? So what we are trying to say here is that we need to manage our cash, and we need to also to look into investing in it, no, so that we can also earn money out of it. So that's in the form of interest income, and without hurting the business operation. Kasi ayaw naman natin mangyari class na sabihin natin, no, for the year we have forecasted 100 million. Sabihin lang natin na 100 million cash ang kailangan natin to operate the business for the whole year. No? And of course, the ideal scenario is that first period pa lang, so day 1 pa lang of your operation, meron ka ng 100M. Kasi what we don't want to happen is mag-aantay ka ng collection, yun yung ibabayad mo. Kung may payroll or whatsoever, no? So kasi 'di ba ang kailangan is dapat meron din safeguard of cash, no? So therefore kung may na-collect ka, deposit agad sa bangko, no? So what I'm trying to say here is that kung ideal scenario, meron kang 100M day 1 to cover the full year operations. So, ganun na. Meron kang 100 million day 1 to cover the whole operation. Of course, that 100 million, hindi mo naman gusto na hawak lang. Pero, yung bang 100M, dapat lahat naka-invest. So, later on, we'll discuss that. But, summarize briefly, cash management, we're going to look at the appropriate level of cash and at the same time, yung level na dapat na ini-invest natin in marketable securities. All right. So what are the different strategies in cash management? So number 1, accelerate cash collections. No? So of course, sabi natin, credit is good, but cash is king nga, di ba? So therefore, when you're trying to increase your sales, so thereby increasing also your credit, you have to make sure that you're able to collect it and collect it as soon as possible. No? Kasi ang palagi natin sinasabi, mas matagal na hindi nasisingil yung AR, there's a likelihood na hindi mo talaga siya makolekta or maging doubtful na siya. Number 2, control or slow down disbursement. O tingnan mo to ha, parang medyo unfair, no? Sa una, gusto mo makakolekta agad. Number 2 naman, gusto mong pahabain naman yung terms ng pagbabayad. Of course, we'll cover this topic when we go to short-term liabilities management naman, no? But right now, what we're actually saying, syempre merong involved na disbursement whenever you're paying your accounts payable, your payroll, your accrued payroll, no? Syempre, ang sinasabi na dito, control or slow down. So kung halimbawa ang terms mo with supplier is 30 days, there's an opportunity for you to extend it for another 30 days, then grab it, no? Pero yun nga, meron tayong separate topic for that. And number 3, reduce the need for precautionary cash balance. Ano ba tong precautionary? So, parang sa atin na lang, no? Kasi tingnan natin yung situation natin. Of course, ayaw naman natin na mangyari, no? Pero in case meron mga health problems, so dapat meron tayong emergency fund, no? Basically, precautionary cash balance is synonymous with your emergency fund, no? So sinasabi dito, you have to reduce it in such a way that we'll be able to also invest those money, no? Kasi nga, pag sinabing precautionary cash balance, parang contingency fund mo lang yan. So you're just making sure na kung hindi man ma-hit yung forecast mo in terms of disbursement, meron ka naman, meron kang fund to get those expenses, no? All right. Sige. What are the reasons for holding cash? So number 1, we have transaction purposes. So firms maintain cash balances that they can use to conduct the ordinary business transactions. Cash balances are needed to meet cash outflow requirements for operational or financial obligations. No? Simply class, transaction purposes, ito yung ginagamit natin to make sure that we continue the conduct of business operation. No? So, number 2, compensating balance requirements. A certain amount of cash that the firm must leave in its checking account at all times as part of a loan agreement. These balances give banks additional compensation because they can be relent or used to satisfy reserve requirements. O paano naman yung compensating balance? So for example, nangutang ka kay BDO. Inutang mo is 1 million. No? So, pero ang requirement ni BDO, syempre meron ka account kay BDO, no? Kasi ganoon naman palagi, hindi ka makakapag-loan kay BDO without opening an account with them, no? Of course, ang i-credit sa iyo sa bangko mo is 1 million. However, out of the 1 million, ang usapan niyo ni bangko is 20% of the 1 million will be retained as compensating balance. So ibig sabihin, you can only withdraw 800,000 pesos. The 200,000 pesos will remain in your cash account, in your bank account, until such time na ma-fully pay mo na yung loan. No? Ngayon, bakit ba nagkakaroon ng compensating balance? So, well, one good reason is that in terms of default, so meaning hindi ka nakapagbayad, the bank can always get it from this compensating balance. So yun lang naman yun. It's for their protection. At the same time naman, makukuha mo rin naman tong money na to towards the end of your loan payment. Okay, so number 3, ito yung diniscuss natin kanina, precautionary reserves. So firms hold cash balance in order to handle unexpected problems or contingencies due to the uncertain pattern of cash inflows and outflows. So sabi nga natin class, di ba? Parang isipin mo lang itong nangyaring pandemic. Of course, when the pandemic started, wala naman talaga nag-forecast niyan. Kailan ba yun? March 2020, nung unang lockdown natin. You know? Even the different companies, they need to reassess their forecast because of the pandemic. Imagine, no? March 2020, bigla na lang nag-lockdown. So sarado lahat, walang business operations. No? So, okay. So number 4, potential investment opportunities. Excess cash reserve are allowed to build up in anticipation of a future investment opportunity such as major capital expenditure projects. So, of course, no. So it's self-explanatory. When there's good opportunity to invest, so you can always. I mean, it's also a reason to hold cash. No? Number 5, speculation. Firms delay purchases and store up cash for use later to take advantage of possible changes in prices of materials, equipment, and securities, as well as changes in currency exchange rates. No? Parang ganito lang yan, class. Say, for example, you're a manufacturing firm. And syempre, to operate a manufacturing firm, kailangan mo ng oil. No? Now, of course, dahil nga oil siguro yung pinaka, sabihin na natin, number 1 na or top expense mo, of course, you would like to buy a supply of oil kung kailan bababa yung price ng oil. No? So, meron ka mga analysis dyan. Then, na fino-forecast mo na in 3 years, in 3 months time, mas bababa yung price ng oil, no? Crude oil. So, therefore, you will keep some money just to make sure that in 3 months time, meron kang pang purchase nung oil. No? So that's a good example of speculation. Okay, so let's go now to discussion problem number 1. Of course, class, when dealing with cash management, forecasting is always involved. No? Paano ba yan? Sabi natin kanina, appropriate level. Pero ano nga ba yung appropriate level of cash? No? Siyempre, we need to make sure that we have cash to fully support business operations. Yun lang naman. No? And this topic that we'll be discussing in discussion problem 1 on forecasting will be dealing with capital intensity ratio and additional funds needed, or AFN. No? Those are concepts surrounding forecasting. No? So let's go to problem number 1. Let me read the requirement first. So what was the capital intensity ratio in 2021 and how much is the corporation's additional funds needed for the coming year? Ito na nga, forecasting. No? So let me read the problem. As of December 31, 2021, the corporation's financial records show that it had total assets of 19.6 million and current liabilities of 4.2 million, including notes payable of 1.4 million. O class hinighlight ko yung including notes payable of 1.4 million kasi later on meron tayong i-introduce na topic na. So, steady ka lang. Sales in 2021 amounted to 70 million. This is expected to increase by 20%. Oh, so, meron kang sales in 2021 amounting to 70 million. Sabi, mag-increase daw by 20%. So, magkano yung plus? So, that's equivalent to 14 million, no? Okay, so the corporation is at full capacity. So its assets must grow in proportion to projected sales. The projected after-tax profit margin, this is your profit ratio, is 12%. And the forecasted dividend payout ratio is 85%. So, pag-usapan muna natin itong dividend payout ratio. So, this is one of the financial ratios that we have introduced during our discussion on financial statement analysis. Now, if you have forgotten about this, of course, you can always go back to our recording naman. No? But basically, class, dividend payout ratio is the percentage or the level of dividend that you pay out of your net income. Sige, balikan natin yung basic accounting natin, ha? Diba, towards the end of the year, may record ka net income, pero i-close mo yun saan? Sa retained earnings. Now, that retained earnings, syempre, diba, accumulated profit mo yan yung source mo to pay out dividends, no? Ang sinasabi natin dito, 85% daw of that net income or of that retained earnings can be paid out as dividends. So therefore, merong naiiwan na 15%, no? That 15%, 'di ba? 85 yung binibigay mo as dividends. So may naiiwan na 15%, no? Para mabuo yung 100%. So ang tawag natin doon sa 15% is your profit retention ratio. So meaning ito yung naiiwan doon sa retained earnings, no? So this dividend payout ratio and profit retention ratio are complementary ratios, no? So ibig sabihin, kung 50% ang dividend payout ratio mo, 50% din yung profit retention ratio mo. So they complement, no? Ibig sabihin. Okay. So pag-usapan natin to, let me just share my Excel file, no? So like I said, class, no? Ang ginagamit natin na pinaka-blackboard natin during online classes would be the Excel file. Okay. Sige. Kung napansin nyo, class, dito sa discussion natin sa problem number 1, meron kasi dito isa pang phrase, sabi, the corporation is at full capacity. So its assets must grow in proportion to projected sales. So this time, we'll introduce a new concept, no? So the concept is about spontaneous assets. So basically, class, spontaneous assets are assets that automatically change when sales change. Sige, parang medyo nakakalito, no? Imagine na lang, class, na sabi natin na spontaneous assets or variable assets are assets that automatically change when sales change. Sabihin natin nag-increase ang sales mo. Ano yung counterpart na asset that will also increase? Siyempre, di ba, if your sales increase and sabihin natin sales on account, no? Sales on account increases, and therefore the related asset is your accounts receivable, no? Accounts receivable will also increase. So therefore, accounts receivable is an spontaneous asset or variable asset. Oh, don't confuse variable asset with variable cost, no? That's separate and different discussion, no? So this time we're just talking about spontaneous assets, no? So kung ang spontaneous assets are assets that automatically change when sales change, of course, there's also so-called spontaneous liabilities or variable liabilities. Now, when we're talking about variable liabilities or spontaneous liabilities, these are liabilities which automatically change when sales change. So balikan natin yung sales natin kanina. Of course, may increase sa sales, may increase din sa inventory, no? Kung mayroong increase sa inventory and you purchase it on account, and therefore merong increase sa accounts payable natin, no? So what I'm trying to say here is that accounts payable is an example of spontaneous liability or variable liability. Now, kung napansin nyo earlier, hinighlight natin here, hinighlight natin yung including notes payable of 1.4 million. Kasi class, notes payable isn't classified as spontaneous liability or variable liabilities, no? For the very reason that it's that these are subject to your discretion. So meaning you can draft a notes payable without actually increasing your sales, no? So it could be for different purposes, no? So kaya ang pinag-uusapan lang natin pag sinabi natin spontaneous assets or spontaneous liabilities, these are assets or liabilities which change when sales change, no? So mamaya, syempre, pag-uusapan ulit natin yan. Okay, let's go back to the Excel file, no? So napag-usapan natin yung mga given class, ha? Pag-usapan ngayon natin yung requirement number 1. Requirement number 1, what was the capital intensity ratio in 2021? Okay, so pag-usapan muna natin, ano ba yung capital intensity ratio? So sabi, this is the amount of assets a business requires to generate 1 peso in sales. For this ratio, a smaller figure is better. The lower the CIR, the less capital is needed to be invested to run a business. So ganito lang yan, class. Ang capital intensity ratio basically is, kung meron kang 1 peso na sale, magkano yung kailangan mong i-capital induce to generate 1 peso of sale, no? Siyempre, ang gusto natin is mas mababa, no? Imagine na lang, no? Parang ganito. Para makapagbenta ka ng ano bang pwede example? Para makapagbenta ka na lang ng Chicken Joy na naman ako. Sige, Chicken Joy. Para makapagbenta ka ng Chicken Joy, magkano yung dapat na level ng asset lang yung part ng sales ng Chicken Joy? So sabihin natin, magkano na ba ang Chicken Joy ngayon? 300 pesos per bucket, no? Sabihin natin for 300 pesos of Chicken Joy, piso lang yung ginagastos ng company or piso lang yung asset involved. So sa happy-happy ka. Kasi imagine, 300 pesos ang sales mo pero 1 peso lang yung asset na ginagamit mo, no? So that's the concept of capital intensity ratio. In fact, the formula to get the capital intensity ratio is your total assets divided by total annual sales, no? So let's derive the formula. So how much is the total assets? So given class, no? Total assets is 19.6 million. So kunin ko lang dito, there, no? 19.6. So parang hindi ka siguro malito, buuin ko na siya. Divided by total annual sales, no? So sa annual sales given then, that's 70 million. Okay. So therefore, we have a capital intensity ratio of 0.28 or 28%. Anong ibig sabihin yan? So sabi, sa kada piso gumagastos ka or the asset that's being required or used amounted to 28 cents lang, no? So that's okay, no? Pero sabi nga natin, para mas effective yung capital intensity ratio mo, and the smaller the figure, the better, no? Okay. So that's requirement number 1. The answer is 0.28. Ngayon, pag-usapan natin yung requirement number 2. How much is the corporation's additional funds needed for the coming year, or AFN? This is also called external financing needed. Now, class, there's a formula actually to get additional fund needed, no? Pero iisa-isay natin kasi it looks very, sabi natin, complex, pero pag iisa-isahin natin, dandahanin natin yung pag-solve, madali lang naman. Sige. Una, syempre, ano muna yung formula? So the formula to get your additional fund needed is increase in asset less increase in liability less profit retained. Ngayon, isa-isahin natin, no? So basically, class, there are 3 elements that we need to calculate first before we arrive to our additional fund needed, no? So number 1, increase in asset. Number 2 is increase in liability. And number 3 is profit retained. Pag-usapan natin yung increase in asset. Ano ba yung formula to get the increase in asset? Bababa ko lang to. So the formula to get the increase in asset is capital intensity ratio, parang familiar, multiplied by the increase in sales. Dahil palagi kong sinasabi sa iyo na dapat maayos yung pagsulat mo kasi nga usually in financial management and management accounting problems, palagi yan maraming mga successive questions na nire-require yung mga sinolve mo na nung una. Kung halimbawa gulo-gulo kang mag-solve, uulitin mo na naman kung paano mo sinolve yung capital intensity ratio. Kita mo, kailangan pala natin siya sa requirement number 2. So paano ang gagawin natin? So kunin na lang natin yung capital intensity ratio dun sa calculation natin sa taas, no? Which is 0.28. Pero later natin gawin yan. Of course, sabi dito, increase in sales. No? Di ba na-calculate natin yung kanina? Sabi natin, sales in 2021 amounted to 70 million. Ayun si 70 million. This is expected to increase by 20% or 14 million. By 20% in 2022. So therefore, in 2022, meron kang forecasted sales na 84 million. No? So, pero ang tinatanong lang kasi sa atin, ang hinahanap lang natin sa ngayon is yung increase in sales. No? So, okay na tayo dito kay increase in asset. No? Let's derive the formula. So, how much is the capital intensity ratio? Ayun, nakalink pa nga, 0.28. Multiply by increase in sales of 14 million. No? So we have increase in assets of 3,920,000. Okay na tayo dyan. Okay. Next element is increase in liability. Sabi natin, increase in liability is variable liability ratio multiplied by increase in sales. Sabi mo, na-discuss natin yung spontaneous liability or variable liability pero hindi natin na-discuss yung variable liability ratio. So therefore, discuss natin. Paano ba yung pag-compute ng variable liability ratio? Ang sabi dito is variable liability over sales. No? Kanina, di ba, diniscuss ko rin paano nga yung pag-compute ng variable liability. Sabi natin, variable liabilities are spontaneous liabilities are liabilities which automatically change when sales change. Tapos sinabi pa natin na notes payable isn't classified as variable liability because these are subject to your discretion. No? So therefore, ito yung details. Ano ngayon dyan? Yung variable liability natin. So sabi ng problem, current liabilities of 4.2 million including notes payable of 1.4 million. So therefore, class, we just need to deduct the 1.4 from 4.2 million. No? So we can calculate the total variable liability. So that's 4.2 million less 1.4 million na notes payable. So the total variable liability is 2.8 million. Okay na tayo dyan. Now, how much is your sales? So sabi kasi, di ba, to get the variable liability ratio, it's variable liability divided by sales. So sales is 70 million, no? Ayun naman, given naman yan siya, class. So therefore, the total variable, the variable liability ratio is 0.04. So balikan ngayon natin yung formula natin ng increase in liability. So that's the variable liability ratio multiplied by the increase in sales. So isa-isayin natin dahil meron ka ng variable liability ratio, that's 0.04 multiplied by the increase in sales. Magkano nga increase in sales natin? Ayun, 14 million. No? So therefore, the total increase in liability is 560,000. So, okay na tayo sa first two elements to calculate the additional fund needed or AFN, or also known as EFN or external financing needed. Puntahan na natin ngayon yung third element. Ano ba yung third element? The third element is the profit retained. Ang formula daw to calculate the profit retained is new sales multiplied by profit ratio multiplied by profit retention ratio. O sige, balikan natin yung discussion natin kanina. Though dito sa tatlong elements naman na to, ang new sales is na-identify na natin. New sales is the sales in 2022 which is 84 million, di ba? Profit ratio is given. Profit ratio is 12%, no? The projected after-tax profit margin is 12%. That's your profit ratio. Now, paano nga ulit yung pag-compute ng profit retention ratio? So again, class, profit retention ratio is complementary to the dividend payout ratio. So kung ang dividend payout ratio natin is 85%, therefore, profit retention ratio is 15%. No? So again, class, wag kang malilito. Ang pinag-uusapan lang naman natin dito is kung out of your retained earnings, 85% is being paid, no? Is to pay for dividends. So therefore, may naiiwan, no? May naiiwan sa retained earnings mo amounting to, yun nga, the complementary percentage, which is 15%. Okay, so with that, isa-isa na natin para makalculate natin yung profit retained. So how much is the new sales? Na-compute natin kanina. 84 million, no? So that's 70 million multiplied by 20%, no? So 1.2 para makuha mo yung 84 million. So okay ka na dyan. Profit ratio is given, 12%. And of course, ngayon na alam mo na yung concept ng dividend payout ratio, nasabi nga complementary sa profit retention ratio. So alam mo na 15% yung profit retention ratio mo. So we have to multiply the 84 million multiplied by 12%, multiplied by 15%, and that's 1,512,000. So nakuha na natin ngayon yung tatlong elements to calculate the additional fund needed. So sabi ulit natin, to calculate your additional fund needed, it's increase in asset, less increase in liability, less profit retained. How much is the increase in asset? It's 3,920,000. How much is the increase in liability? It's 560,000. The profit retained is 1,512,000. Kunin lang na, i-deduct lang natin sila. So 3,920,000 less 560,000 less 1,512,000. So you will get 1,848,000. And this is your additional fund needed. So anong ibig sabihin plus ng additional fund needed? You need 1,848,000 to make sure that you'll be able to support this objective class. So sabi, you are expecting to grow your sales by 20%, no? Sabi natin, in order to make sure that the operations can operate and achieve that, dapat meron tayong amount of cash amounting to 1,848,000. Ngayon, yung sinasabi ko dito, class, it could be lower than 1,848,000 kung yung capital intensity ratio natin is lower than 0.28. No? So yan yung may factor affecting AFN, no? Particularly in this area. Okay, so that's additional fund needed. Okay, so let's now go to the next concept. No? So next concept is economic conversion quantity. So kanina, di ba, sabi pag-usapan natin. So at the beginning of the year, sabi, ang forecast natin, kailangan natin 100 million to support the business operation. And sabi rin natin kanina, ideally, in a very perfect scenario, meron ka ng 100M day 1 pa lang. No? And of course, sabi ulit natin, at basically, nire-review natin yung mga concepts. No? Sabi rin natin, ayaw naman natin na hawakan lang yung 100M. No? Kasi nga, there will be opportunity loss no? Kung hawak lang natin yung 100M. So therefore, we would like to invest it. Saan nga natin i-invest? Sa marketable securities. So basically, this economic conversion quantity tells us kailan tayo dapat mag-convert. Kasi ayaw naman natin na, sa sahod this month, lahat ng pera natin nasa marketable securities. O sasabihin natin kay employee, relax ka muna dyan, kain ka muna ng peanuts kasi yung sahod nyo madedelay kasi inaantay pa natin na makapag-convert tayo ng marketable securities. So binibenta pa natin siya sa market. No? So hindi pwede mangyari yun. So therefore, kailangan natin intindihan itong concept ng economic conversion quantity. In fact, class, this is similar to economic order quantity when we go to the inventory management naman. So, economic conversion quantity, napapanahon, this is ECQ. Okay, class, ha? Huwag nyo sana tanungin kung meron bang MECQ or GCQ. No? So, iba yun, class. Though napapanahon, this is ECQ, economic conversion quantity. Basically, we're talking about the amount of marketable securities that must be converted to cash or vice versa, considering the conversion cost and opportunity cost involved. Kasi class, hindi naman kasi libre na hindi libre na basta mo na lang ma-convert yung marketable securities mo to cash, no? So there are charges, no? Kaya nga we call those charges as your conversion cost, no? And of course, kung hindi mo naman siya i-invest, meron ka naman talagang opportunity cost, no? Opportunity cost in this case is tantamount to the rate of interest that can be earned, no? So ito yung dapat kinita mo pero dahil nga you just hold the cash with you, so hindi mo ininvest, so yun yung benefits that you forgo, no? So that's opportunity cost, no? So napag-usapan natin yung conversion cost and opportunity cost. Also, ECQ is also called as OTS or optimal transaction size, no? So what's the formula? ECQ is equal to the square root of 2 multiply conversion cost multiplied by annual demand for cash. O class, ha, hinto muna ako dito. Let me point this out. The requirement is annual demand for cash. If the problem ang binigay sa atin is quarterly, of course, we have to convert it to annual, no? So multiply mo by 4 because there are 4 quarters in a year. Paano naman kung monthly? Di multiply mo by 12 to get the annual, no? So we have to express it in annual figures, no? Basically, divided by opportunity cost. Ngayon, class, siguro as early as now, i-check mo na sa calculator mo yung function ng square root, no? Para at least hindi tayo mahirapan when we go to problem solving. All right. So with that, let's go to problem number 2 on optimal transaction size. OTS, or this is also your ECQ. So what are the requirements? Number 1, optimal transaction size at mga ECQ. 2, the average cash balance. C, the number of times during the year the company has to convert marketable securities to cash. So meaning, sa buong taon, ilang beses daw tayo dapat mag-convert ng marketable securities to cash. No? So yan, very exciting. Number 4, total cost of converting marketable securities. Sabi nga natin, hindi siya libre. So may bayad siya. Kada magbebenta ka ng marketable securities, may mga charges. So ito yung conversion cost. Letter D basically is telling us to compute for the total conversion cost for the year. Ayan ha. Sana meron ding nagkukwento no while taking the exam no. Pero ito kasi yung approach na tinuturo ko para at least during examination, ganito rin yung pero class na during examination, syempre hindi mo naman ilalakas yung boses mo para isa-isahin. So tip lang. Letter E, total carrying cost of cash or simply your opportunity cost. No? Okay, so let me read the problem. Assume that the fixed cost of selling marketable securities is 833.33. So what's this 833.33 class? This is your conversion cost. And the interest rate on marketable securities is 10% per year. So this is your carrying cost or your opportunity cost. The company estimates that it will make cash payments of 600,000 per quarter. Again, balikan natin yung discussion natin kanina. Sabi natin, in calculating for your ECQ or economic conversion quantity, we have to express our cash demands in annual figures. So therefore, 600,000, we have to multiply it by 4. No? So with that, let's go to our Excel file. No? So let's have discussion problem number 2. Isa-isahin natin. Ang approach natin, class, isa-isahin natin and at the same time, ilagay na rin din natin dito yung concept no? So that may makita natin kung paano, especially it includes formula. No? Okay. So ano ba yung mga given? Inisa-isa na natin yan kanina pero ulitin natin. No? Sabi natin meron diyang conversion cost of 800.33. So happy ka na dyan. Annual demand for cash dahil nga annual, ang given sa atin is in quarterly basis. So 600,000 multiplied by 4. Saan galing yung 4? There are 4 quarters in a year. Okay. So that's 2.4 million. Opportunity cost, sabi natin opportunity cost is basically your carrying cost. Carrying cost or the rate of interest that can be earned on marketable securities or ito nga yung opportunity cost natin na tawag. No? So that's 10% also given. No? Sige. So dahil meron na tayong lahat ng factors or elements no, to calculate ECQ, pwede na natin derive. No? Like sabi ko class, ang gamit natin ngayon is Excel. Pero syempre, when you're using your calculator, you have to make sure that you're getting also the same result. No? So square root. So square root of 2. Unahin mo muna yung sa loob. 2 multiplied by 833.33 multiplied by 2,400,000 divided by 10%. Get the square root. So the ECQ is 200,000 pesos. So meaning, ito yung level na dapat na kino-convert mo. Every time magko-convert ka ng marketable securities to cash, this is the level where you minimize the conversion cost and opportunity cost involved. No? Pag sinabi nating minimize, of course, meron pa rin. No? Kasi hindi naman magiging zero yan dahil hindi naman libre talaga yung pag-convert. No? So, when we say we are able to minimize conversion costs and opportunity costs, we kept it in the equilibrium. So, meaning balance. They're equal. No? So later on, makikita natin yan. Average cash balance is, well, ito, simple lang yung formula, ECQ divided by 2. So that's 100,000. Letter C, ang hinahanap natin sa letter C, number of times the company has to convert marketable securities to cash. Di ba ito ay pinag-usapan natin na hindi naman natin gusto na every time may expense kang parating, palagi na lang tayong mag-convert ng marketable securities to cash. No? So we have to make sure that we have the appropriate level of cash with us. No? But in any case, ito given yung analysis natin sa economic conversion quantity, ilang beses ba tayo dapat mag-convert? So the formula to get that is the demand, annual demand divided by ECQ. So we have the annual demand of 2,400,000 divided by the ECQ of how much? 200,000. So meaning 12 times. So parang monthly. So once a month pala, kailangan natin mag-convert ng marketable securities to cash, no, in order to support the business operations. No. Letter D, conversion cost. So sabi natin, this is the cost to convert marketable securities. Magkano? 833.33. Ano ba yung formula? No? So number of times multiplied by the conversion cost. No? Na-compute natin kung yung number of times. Sabi natin 12 times. So 12 times 833.33. 12 multiplied by 833.33. This is your conversion cost per transaction. No? So that's 10,000 pesos. So happy ka na dyan. Punta na natin yung letter E. Letter E is basically the carrying cost. Paano yung pag-compute ng carrying cost? Sabi dyan, average balance multiplied by the opportunity cost. So kung opportunity cost yun, alam mo na, yun yung 10%. No? So average balance of 100,000 multiplied by 10%. No? So that's 10,000. Pansinin nyo, class, na ang conversion cost and carrying cost are equal. Coincidence ba yan? Well, the answer is no. Kasi nga, we're analyzing ECQ. Basically, in ECQ, this is the level where we need to convert marketable securities. No? Taking into consideration conversion cost and carrying cost. At sabi natin, in ECQ, we're actually trying to minimize conversion cost and carrying cost, no, at the equilibrium. So meaning yan na yung pinaka mababa, no, yan na yung pinaka managed level of this cost, no, so at 10,000 pesos for equally. Actually, that ends our discussion on working capital and cash management. Like I said, class, this is just one portion of working capital management. No, we'll also deal with your accounts receivable management, inventory management, and also your short-term liabilities. No, so I hope you learned something today. Thank you for attending my class, and I'll see you again next session. Thank you, and stay safe. Goodbye.
This has been your instructor, Mark Gibson. Thank you for learning with us. See you in our next discussion. Don't forget to like and subscribe. See ya!